Welcome to the Swing Trading with Cycles channel. It is January 8th, 2023. We're going to cover crude oil today. So we have the first full week of trading for 2023 complete. We're about to start the second week. We're going to talk about crude oil here. We'll focus on WTI. Let me get back to that. Okay. So we'll focus on WTI. We'll look at XLE. We'll also look at various other energy names, try to understand what direction is the price of oil going, and also where are oil equities going. They're not always moving in the same direction, and in fact, in this case, they're continuing to diverge. So let's start with the daily chart for oil. As always, take a look at the pinned comment for a ton of great background information. Get yourself up to speed, especially for people that are new to the channel. On this channel, we are focused on analyzing trends. Why? And it's because prices trend. It's because that's what prices do, right? They either trend up or they trend down, or they're moving in some kinds of sideways fashion. And you can use precise analysis to understand which of those three conditions is true. And based on that, you position yourself for the trade. Obviously, if it's trending up, you want to be long. And if it's trending down, you want to either get out of the way, or if you're aggressive, potentially short. And generally in a range, you want to be careful to kind of not get sort of caught up in the random chop. So oil is in a downtrend. And the other thing about that is everything happens on multiple time frames, right? Right now we're looking at the daily chart. There are weekly charts, monthly charts. Really you can actually create a chart for any time frame possible. And so it's important to understand what price is doing on each and every time frame. So right now we're looking at the daily. On the daily chart, price is in a downtrend. And what I mean by that is we're making lower lows and we're making lower highs. That's what a downtrend is, as opposed to an uptrend that's making higher highs and higher lows. And we use cycles to kind of wrap it all up to give us an easy sort of shorthand. So we can say, for instance, in this 28-day cycle, price advanced was in an uptrend for 9 days. And then it was in a downtrend this is a 28-day cycle. So if it was in an uptrend for 9 days, it means the downtrend lasted, 19 days, right? Something like that. So that's a pretty bearish period of time, right? Where price only advanced for 9 days and then it declines for 19. That sucks, right? And so we've started a new cycle. And again, pinned comment has all the background on this stuff. So I'll talk about it, assuming you've looked through that content, or at least you will, and then maybe rewatch this having understood those concepts. It's looking like day 15 is our daily cycle high, or DCH. So it's already ominous that this low is lower than this low, which is lower than this low, which is lower than this low. You're probably noticing a pattern, right? That's the downtrend, right? Lower lows. That's the lower lows part. And then you have the lower highs part. That's where it got a little murky, especially this time period. We actually made a higher high, like compared to this lower high, but then we proceeded to make a lower low anyway. So you want to be careful. Again, things are going to change. Things are going to be dynamic on different time frames. But for the daily chart, the salient point here is we have a high on day 15, and then we formed a swing high. So really, we actually had a high on day, what is that? That's 14, 13. So we actually had a high on day 11, and then we made a slightly higher high on, Tuesday, January 3rd. But then it went red. And you can see, as we talked about in the previous video, Tuesday was a bearish outside day, which means it makes a higher high, but also makes a lower low, and it closes red, right? As opposed to a bullish outside day where it also makes a higher high and a lower low, but it closes green. Think about that, right? If price goes to one extreme and then shoots back the other side to the other extreme, that generally means it's going to follow through, right? Like in this case, it went from green to red, and it did follow through. It doesn't mean always. There are no guarantees in markets, folks, ever, right? But this increased the odds that that's what we would see, and that's what we did see. And now for the last 2 days, we had consolidation. Friday was day 18. And the days are just, again, to kind of count, like, again, this was a really extreme case where the rally only lasted 9 days. In this case, it would appear the rally has lasted 15 days, right? This rally lasted 30 days, but as we've said from previous videos, you can see this is really a double top, right? So it's actually, this is really your rally, and then you kind of almost gave it all back. You chopped around a little bit, and you just kind of got right back to where you started on day 30. So this is not as bullish as it looks, right? It's not like a clean 30 days up. And again, so it looks like we're topping out on 15 days, and also notice we're topping out right around here, which is the last lower high. That's an important sort of cue. Price generally can't get past the last lower high in a downtrend. Like that becomes your sort of capper. Another word for this is a swing high, right? This is your last swing high, this candle here. And so we did get right around that level, and then we failed. So to be clear, right, as you're thinking about where price is going from here, this candle suggests, in the same way that this was a bearish candle, this is also a bearish candle. Anytime you get upper wick like this, it means the candle was green and then it went red, right? Anytime you have upper wick, because this candle, knowing it's a red candle, we know it opened here, and we know price was all the way up here at one point. But then we came and we closed all the way down here. We closed below the open. So this is a very bearish scenario. It's in the same way that this is a bearish scenario. Another one term people use is a false breakout, right? Like price tried to go higher, but it couldn't. It ran into a wall of resistance, a ton of supply, a lot of sellers, right? And so you would expect then that our next kind of move is, so just kind of drawing this out, this becomes a lower high, right? So you expect a lower low, and you expect price not to be able to come back to here. Sometimes it does. I mean, you can see there's no such thing as like a quote unquote perfect downtrend or a perfect uptrend, but it gives you a general zone to kind of look for, like, okay, price shouldn't get back to here before it goes. So maybe it even gets to like something like here, and then something like that. Obviously, every downtrend is different. And then from there, as hopefully you're getting the clue, this becomes your next lower high, your next swing high. Like that's the premise, right? And so since we're on day 18, these cycles can vary in great length. Like this is a really long one at 54 days. This was only 28. That was 39, and that was almost like straight down. This was 30. So who knows how long this is going to be, but they generally don't end around day 18, day 19. So it's realistic to assume we're going to get some more downside. And if we just kind of like scenario plan that, like let's say it's a 25-day cycle, that would give us our low. And this is not a prediction, be very clear. I don't make predictions. I can't make predictions. That's not how price works, right? All you can do is observe the trend and then think about what are logical pivots that we may take out. And based on the way this thing generally moves, like when do we tend to see, a cycle end, like exhaustion, right? And so that's interesting. So you could, like, if it were a 25-day cycle, we could see our low on somewhere around January 17th. Again, it's a scenario. We could also see a world where, we have a longer cycle that's like, let's say closer to, let's say even 35 days. That would have us get our low down at the end of January. The point there is that you're not trying to predict when the cycle ends. That's not possible to do. What you're looking for is a swing low in the right timing band. Again, so like this is a swing low, for instance, right? We got this swing low on day 54. That's really long. Like this period of time, that's really long. And we got our swing low. We crossed above the 10-period moving average. It's another kind of criteria people use. I mean, this was a clear little uptrend here until it kind of broke down. And it could still be recovered. Like, I mean, you can see higher high, higher low. I'll draw it out just so we're clear here. See, this was a nice little uptrend until it wasn't, right? Now, it could still like get saved and do something like that. You have to be aware. You have to be ready for all scenarios because price can do whatever it wants. It's the collection. It's the collective sum of all sort of decisions that market participants are making. There's no way to know what that's going to be, but you can understand what the trend is and position yourself again. So let's look at the weekly chart. So we're saying that we're probably looking at a daily cycle that goes into the end of January or maybe mid-January. And that means we can kind of think about where we are in the weekly cycle, and that those two things are going to, they're going to be correlated, right? So let's say we got that low around, the week of January 23rd. Let's say we got that low that last week of January. That would be an 18-week cycle, right? Because right now we are on week 14, right? And so the last cycle ended on week 24. Just like we had a really long daily cycle, this was well, relatively long weekly cycle, because this previous one was 19, this one here was 15. So a cycle that's 18 weeks would be just fine. And I mean, even 15 or 16 weeks. The important thing here is that the next daily cycle low is probably also going to be the next weekly cycle low, because we know the daily cycle is declining. We know it's on day 18. So it's not early in the daily cycle. Now, none of this is a guarantee by any means. These are scenarios that we can, like, if we start to see that they're playing out, it helps us to position ourselves. So we kind of have a plan if it's playing out if one of the scenarios that we've laid out is playing out, right? And so in a world where you're looking for that next daily cycle low to be also a weekly low. So you expect that we break this pivot, or at the very least some kind of like double bottom kind of situation. Now that's right around $70, and we know the US is looking to replenish the SPR around that level, and so it makes sense that price may have a tough time getting down there, right? Like maybe it's a slight little undercut and then it recovers, right? Because we know you have a huge buyer in there. Who knows? We'll have to see. There's no way to know that in advance. We have to watch price, and so that's the weekly time frame. And if you think about the longer term trend, like sort of cycle, we're talking about here a 3-year cycle. Now, again, just to be clear, none of these are like, oh, well, this has to end on exactly that date, or none of that. As I said, it's to give you just a general estimate of timing, right? And so we generally do have these 3-year cycles. So that's around 36 months. We had a very clear top March. Look at that, the wick on that candle. And we talked about it. A wick is a pullback on a lower time frame. In this case, the pullback wasn't strong enough to make it go from green to red. So it remained green, but this is still incredibly bearish. And we're declining. So we had a swing. So December was a swing low when we were above $83.32. We're now obviously not above $83. We're actually about $10 lower than that. And so we need to get back above that level for this to be a swing low. That's how that works. And there's a video, again, in the pinned comment. So important to understand that. Every bottom is a swing low, but not every swing low is a bottom, right? Because sometimes they fail. And so this thing needs to hold up for that to be our long-term cycle low. It's looking more and more likely that it's not going to hold up. And again, maybe when we're talking about that weekly, like that low is that $70 low, the same low from that we were talking about on the weekly time frame, right? And so it does, I mean, the logical place would be somewhere around $62, right? In the 60, maybe even the mid 60s area. Maybe we don't get all the way down to 62. So maybe that becomes your undercut and then it bounces. But this does seem like, you just kind of think about like, this is your low, your lower high, your lower low, right? And so this is your lower high potentially, right? Like theoretically, right? Because price went all the way down there and then we actually opened up there, right? So you would expect something like that, right? Like that's what it seems like price wants to do. But again, you have that big buyer there and they're at 70. So all of that is very bearish for oil, although it does seem like, maybe we get a daily low, which is also a weekly low in a few weeks. So that's important. But what does it mean for energy stocks? Energy stocks have been incredibly resilient. Let's look at XLE. And so I tweeted about this. This bearish candle right here was a pretty ominous one, right? And that suggested that this was your top. That was day 9, I believe, right? Day 11. So you had a high on day 11. And it suggested that like once we got this this candle in real time was also very bearish. And the reason they're bearish, to be clear, is that we make a lower low, right? That's again another way of saying a swing high. I'll just draw that just to make sure that's clear, right? Like by crossing below the low of that candle, we're creating a swing high like that. But then we got so just to be clear, this was actually a little downtrend, right? Like let's zoom in here, folks, right? So we got this little low, And then we made this high, which is a lower high than that high that we started with. And then we got a much lower low. But now we've done this, right? That's the way to kind of think about it in your mind's eye. Like that's, and as you do this more, you build up that skill, you'll start to be able to see the candles this way. And like, again, it's just math, right? You can almost think of these three candles as one compound candle that's now a bullish outside candle of this one. I'll take this line off. I know this is a little bit advanced, but think about that, right? This candle makes a lower low than this one, and then these subsequent two candles follow through on that move. So if I just kind of draw, actually, like, you can kind of think about that, right? Like if you just took those three candles and combined them into one candle, right? That move took out the low of this candle and the high, right? It's a bullish outside candle. Now, the pullback here, as we, again, always a pullback when you see upper wick, is obviously not auspicious. But this is just showing you that energy stocks are resilient. There are buyers in here. There are people buying these things up on the dips. But it does give us a new high on day 18. But notice that contrast, right? Oil is close to making a new low on day 18. And we're actually making a new high here for XLE on day 18. Very interesting, right? And what does that do for the weekly? This is the most interesting. So we had topped out on week 18, and then this is a week 21. So I'm just going to put that number there again, put that on the table. And notice that this is changing, and that's okay. That's the whole point. You want to change with the evidence, and that's what I mean when I say watching price action in real time. So this looked like at one point that we were about to do something like this. And maybe we still will, right? So we made this low, and it looked like we were about to do something like this and then that, right? That's because this candle here was red, right? The same way that a upper wick is bearish, a lower wick is bullish. This candle here was very red. It had made a lower low below this candle. It looked like this bear flag was breaking down, but then it obviously flipped from red to green. And that's literally this rally that you're seeing on the daily that did this to the weekly, right? Like that's the multiple time frame analysis. So incredibly important. If you're not looking at multiple time frames, you're really not seeing the whole picture. It's just not the way to trade or invest. And so the question now is going to be, do we get above this ceiling of resistance though, right? Because this could still be a fake out, right? We still haven't really done anything quite significant yet. There's still more to be done. And it's also interesting that we still close below the 10 period moving average. That's always kind of interesting. I think of that as an extra thing. The moving averages are slow. They're always going to get you in the move late or get you out of the move early or late. They're always going to be behind the actual price action. So I always behoove folks, watch the price action. Think about the moving averages, absolutely secondary. And then you can see on the monthly we're green, right? Again, I think oil is red on the month. Yeah, look at that, deep red. Other really, always the color of the candle is important because red means it's going lower. So oil is clearly red on the month. XLE just went from red to green. That's the other thing. Because on account of this lower wick here, we know that this candle was red like oil and it's now recovered. We're going to have to see if it can hold that recovery. So that's XLE. Let's look at some of the other names. We'll look at the monthlies first. So that's our first contrast, right? Are they holding red? Or excuse me, are they holding are they holding red with oil, or have they flipped to green? So VLO has gone green, but it is more of a doji now. XOP, that's still red and also still very close to making a lower low. Exxon just went green. My God, look at this little bull flag off of this huge move in October. That's really bullish. PSX, wow, that looks probably the most bullish looking candle we've seen so far on the monthly. PSX, that's Phillips 66, by the way. OIH, also very nice little bull flag here, similar to what we were seeing for Exxon, very bullish. ConocoPhillips just going green. Devon Energy just slightly green, but very close to a lower low. Marathon Oil didn't quite get to, and we talked about Devon and Marathon Oil being two of the more bearish looking ones here, and that trend continues. So of the energy names, it's the only one that didn't quite go green yet. Just missed it by just a hair. Oh, Chevron, interesting. Chevron is underperforming as well. So that's actually still red also. And if you think about the weekly charts, it's really the same picture, right? Like we had this big recovery as XLE. I mean, in that it looks like Exxon. Wow, look at that. It looked like we were going to make a lower low on the weekly. Phillips 66. That's looking really bullish here. So these things are showing again that there are buyers in this thing. The stop areas are pretty clear. You can put your stops. I would put my stop somewhere below the low from last week. Full disclosure, I'm not trading these oil names myself. Not yet, personally. There are better opportunities out there, more easier risk rewards. So you can see the weeklies are all looking about the same. And if you think about what that means for the daily cycle, did we talk about the daily cycle for XLE? Right. So being on day 18, also important to note, it's not super early in the daily cycle, and we basically used up 18 days kind of churning. And that's my point. Like this isn't the most bullish sector, but it is showing resilience, I guess is what I would say is the most important kind of clue. VLO, I think they're all pretty much on day 18. It's a very similar picture for everyone. Yeah, day 18 also made a new high. But I mean, look at that bearish candle to close out. Exxon, yeah, they all kind of pulled back pretty aggressively at the end. But they're all in the same kind of area. Oh, that's interesting. Devon made a new low on January 4th. So again, just a continuing theme. Like when something bottoms later than other things, that's a sign of weakness, right? It's showing that while something else held a higher low, it went on to make lower lows. And so Devon continues to kind of sort of underperform. Marathon Oil, same thing. So they're kind of in the same boat. Chevron is not quite as weak, although it is red on the month so far. But it's really Marathon Oil and Devon that you want to be careful of. And so I'll wrap this up here with just looking at the XLE chart and the monthly. At some point, you imagine we're going to get more of a, like, yeah, I mean, it's a question of this cycle having ran for, what is that, 32 months? And so I wouldn't be surprised if we saw more consolidation versus a straight move up for a little bit longer. Because, I mean, this rally for 32 months, generally, a cycle, an advance that aggressive has to kind of digest. You have to kind of digest that move, right? So that's a 240% increase, and that's not even from the Pico bottom, right? That's if you got in, like, just call it within the April candle. You can kind of adjust this even if you kind of say like you got in here, right? That's still, it's huge upside is the point, and so it would be surprising that we only get 1 month of decline, which is what we're seeing here, right? That December made a lower low, but it's basically mostly recovered. And now this is just an inside month so far. But again, it has gone green, which is obviously bullish. You have these, like, this is another period, right, where where XLE went kind of bananas, right? Like it essentially rallied for 70 months, right? Like, look at that. Like, that's an uptrend, right? And what is the percent increase? Again, not even from the Pico bottom, but 340%. So a bigger move than this one, but mind you, this is 70 months and this is only 32 months, right? Now, what I'll also draw your eye to, though, is like, look at this little period where we had like a little bit of trouble, like, right? So like, what if, like, what is that? Like, from, let's say, from here to like here, right? Well, that's 166%, but let's see, what is that in time? So, oh, sorry, what is that? Where's the time? Day range. So that high happened on month 46. And then we kind of chopped around for 1, 2, 3, 4, 5-ish months. So that's a good example where we didn't necessarily collapse, but it at least kind of took a break, right? Versus this kind of just almost relentless move up. And so maybe we get something like that here where it's not like a massive decline, but it's more of a kind of we do decline, but it's not like a sort of vertical drop. And of course, you did get this like little corrective period here. So that obviously counts for something. So we're going to be watching this closely because energy names are obviously just very popular. They did really well in 2022, and it's going to be interesting to see where they go for 2023. But we'll leave it at that. Thank you for watching today.